The following is a presentation of TFNN. Live at TFNN, The Money Masters. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the October 14th, marvelous Monday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better Money Master and to provide you with tools that empower human potential. Because living up to our potential, that's something that you and we must master each and every day. So let's begin with some empowering beliefs. You know, beliefs have the power to create and the power to destroy. You and we have that awesome ability to take any experience of our lives and create a meaning that disempowers us or one that can literally save our lives. Think about it like this. There's only one thing that you can control in your life, the meaning that you give something. That's the beauty of the markets we trade. We have bulls, we have bears, one that sees an event as a selling opportunity and one a buying opportunity. Your beliefs, the meaning that you give to these events, or any statements or criticisms that come into your life. You are the one that can control the meaning of that. Pretty cool when you really think about the awesome power that each of us have. Now, what we can or cannot do, what we consider possible or impossible, it is rarely a function of our true capability. It's more likely a function of our beliefs about who we are. And that matters because all personal breakthroughs, yours and mine, they begin with a change in beliefs. So how do we change? I found the most effective way to change is to get our brain to associate massive pain to an old, disempowering belief. We must believe at our deepest level that these disempowering beliefs has cost us in our past. And if we continue to believe that, it'll cost us in the present and ultimately will only bring us pain in the future. That does not sound like a good formula. In fact, that formula sucks. Sometimes, folks, knowing what we don't want is just as important as knowing what we do want. I think knowing both is key because once we rid ourselves of our disempowering belief, we then can associate tremendous pleasure to the idea of adopting a new empowering belief system. Lastly, we must know that in any moment, a decision that we make can and will change the course of our life forever. The very next person we stand behind in line, sit next to on an airplane, the very next phone call we make, maybe one received by the show, the very next movie we see or the book we read or a page we turn, any of these could be the single thing that causes the floodgates to open. And all the things we've been waiting for, well, that's the beauty, because they will fall into place. Well, let's go check out these markets. Let's see if they're falling into place right now. We've got the Dow trading off 77 points. It's trading at 15,159. S&P down 9 points, trading at 1694. NASDAQ off 15 at 3776. Russell 2000 down 7 points at 1077. NASDAQ 100, off 9 points at 3224. New York Stock Exchange down 50 points. That's not good. Net decline in issues, minus 1772 right now. That's no good because on Friday, the bulls took control of the market. The bears fumbled it. We had net advancing issues enough to put the oscillator, both the volume oscillator as well as the price oscillator, above zero. Of course, 606 net decline in issues today or more, and the bears will have taken the ball back. This is the daily charts that we're talking about out here as we have moves up and down. The volatility index, that's up about 12% this morning. That's trading up $1.88 out at 1760. Of course, we know when we see a close of a day where the rate of change is above 10% at the end of the day, within 2 to 3 sessions, we are going to see a bounce, a significant bounce out there in the marketplace. Our call number is 877-927-6648. If you give us a call, be happy to field your chart, take a look at your chart or pattern, whatever you're looking at. Let's start off by taking a look at the Dow. Let's take a look at last week, because I didn't mention this during the last hour, during the first hour of the show out here. And we're going to take a look at the Dow, and the reason that we're going to take a look at the Dow is because there was enough of a downtrend last week for last week's candle to form a hammer candle. That's right. the hammer candle out there. That makes the low of last week critically important because you know when you close below a hammer, if you're long, you are wrong out there. Now, what that really means is that price will move down to the next level of support. And there is some support not too far down, but it's not really a bullish candle. That's the problem. And that's at the June 28th low on the weekly chart, really June 24th from a daily perspective, and that's at that level of 14,551.27. But the bulls, they came out in force in what we considered to be the weak link, and only considered to be the weak link because it's the one that had retraced the most with the deepest volume, the most volume in it, volume at the bottoms. Out here, it has been the Dow, of course, some of that being led by IBM. We'll take a look at IBM during the morning. I hope I do. If I don't, remind me to, and we'll go take a look at that. But last week's session, critically important out here because on a weekly chart, it was the only one that formed that one-day single reversal signal out there, and that was the hammer candle. Again, the low that you need to be paying attention to, 14,719. I don't suspect we're going to see the market move down there. If anything, we're going to see maybe some type of retracement. If we take a look at what that retracement would be here, it's going to be some level of the weekly retracement from last week's move. So the 0.618 level, I'm just going to go ahead and, because it's the weekly chart I've got on my screen here, the 0.618 area, that would be a nice pullback. I suspect we could easily get that, not easily, I suspect we could get that inside the Dow. That would take you down to around the 14,914 level. Now, the nice thing there, you like to be able to buy a hammer candle somewhere between the 50% level of the wick and the bottom of the wick. That's where your reward to risk is best at. If you were to buy it now, knowing that the Dow's low, that hammer would act as or could act as support at 14,719, this could be a bit too early to buy. But that's where you have support inside the Dow. That is the daily chart. Again, if I look at the, that's the weekly chart, I should say. We take a look at the daily chart out here. What we can see is that it sliced right through that 0.382 retracement level from high to low, meaning from the swing point out here on September 18th, that high was 15,079 and a bit of change down to the low that came in on October the 9th out at 14,719. That was a test and rejection of both the swing point low from August 28th as well as the June 24th level. This says that what the Dow wants to do is not just run to the 0.618 to the upside, which is 15,331, but at least I would say come in and get inside that swing point, test the swing point from September 18th. It's the Dow that's actually been giving the best signals out here during the daily charts of up and down patterns. That says the low of 15,470.16 is going to be important because a move into that level with volume says that, okay, the Dow is ready not just to get back inside its older rising price channel out there, but that it will move beyond that swing point from September 18th. But you got to take things one day at a time, one moment at a time. That is on the daily chart for the Dow. If we go back in and take a look at the New York Stock Exchange, I mentioned that earlier. Right now we're seeing net decline in issues a bit higher than you'd like to see. At least a lot higher than I would like to see, but not to be unexpected out here, especially with all the shenanigans going on in Washington, D.C. But if we just take a look at the New York Stock Exchange at its face value, we take a look at the rising price channel. This one's a shorter-term one, just simply coming off of the June 24th level. That's your first touch point, the open of that session, which is 88.14. Your next touch point out here looks like that is also the close of August. The 30th, was the close. The close of June 24th, I should say. That price level, let me give you the right number, 88.92. It's the close of the level on August 30th also. That's your next touch point for the channel, and that would be at 92.70. That level held inside the New York Stock Exchange. The retracement was, I believe it was 0.618. Let's go measure it. I'm talking about from August 30th low up to the high on September 19th. It was just slightly below the 0.618 retracement level, but you can see all of these indexes here slicing through the 0.382 and or 0.618 level, all with wide-ranging bars as far. And if you take a look at conviction, now here's what you can do. I'm going to blow this up. Here's the New York Stock Exchange, and let's take a look at the conviction, and we'll measure conviction by the bars on the way down. And if you take a look at it, you did have a fairly convictive. I don't know that that's a word, but we're going to make it a word here. We'll make that a technical term in trading. So we had a fairly convictive bar on September 20th out there, wide-ranging, almost closed at the bottom of its session. So you did have a nice wide-ranging bar there. Then the next time that we see any kind of conviction, I know that's a word, in the marketplace, that happened to be on October the 18th as was coming down and testing the bottom of that shorter-term rising price channel. But you see, we've seen two bars with conviction to the upside. The first one was Thursday, and then follow through on Friday. Look at that, both of them closing at their session highs. Markets do not end on bars like that. That says at the New York Stock Exchange that it wants to go higher, and it has a confirmed A to B equals CD up. That takes you into 10,121 out there. That's already a confirmed A to B equals CD up. If we take a look at a secondary A to B equals CD pattern, let's see where that takes us to. That takes us to 10,101. So we've got a A to B equals CD that could be forming right now, one that's already formed and is still intact. It's still in place, and it's confirmed, takes you to 10,121. So the New York Stock Exchange wants to run into that general area as soon as the shenanigans in Washington, D.C. are over. Now, if we take a look at the VIX index here, what we'll see is on Friday, we'll see that the VIX index had moved all the way down and tagged that 50-day exponential moving average, that red squiggly line on the upper portion of my chart out here. That price level was 1551. It got down to 1546, but closed at 1572. So above that 50-day, when the VIX is above the 50-day exponential moving average, the market moves lower. Now, especially as it's bouncing off of that level, and certainly that's what we're seeing here this morning. What we want to be paying attention to after the shenanigans, after the fireworks are over, is where does the VIX settle down to? Because in order for those A to B equals CD patterns, those wide-ranging bars, to then have the meaning that they have as this moment, we will see the VIX get below that 50-day exponential moving average. And if that's the case, that will set up some of the energy for the move up. Of course, that energy for the move up, that's going to come from the Euro-Japanese yen. So let's go take a look and see what the Euro-Japanese yen is doing. I'm interested in taking a look at this on a daily chart, not the 30-minute chart out here, although that is a nice-looking, very bullish chart. And so let's take a look at the time frame of the daily out here. The daily chart says that what the Euro-Japanese yen wants to do is move up to the level of about 135.65 out there. It's at 133.36 right now. We take a look at retracements as well, coming off of that wide-ranging bar from September 19th. Well, that's not how you do it. You got to grab the right tool out here. Let's see here. It's from September 19th's high down to the low that was put in on October 8th. You can see that price on Friday made it up to the 0.618 level. You can see that the bar that's in place here right now, that's certainly not a bearish bar, so it says that it wants higher price. So certainly 134.11 out here. What you'd actually really love to see is some divergence. You'd love to see the Euro-Japanese yen moving higher and our markets moving lower, because that'll create that little rubber band effect. That'll create the divergence out there, because it is the currency pair in the end that wins. That's what we'd love to see. Right now, the Dow's off 81 points. We'll be right back.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. The Art of Timing the Trade Charts is the only software package available with a built-in Gartley and Butterfly pattern scanner that will scan thousands of stocks, ETFs, and indices each day to find these patterns and then make them available to you with just a single click of your mouse. Tom O'Brien and Dave White will be hosting a live event for all Art of Timing the Trade Chart subscribers on October 16th at 6:30 p.m. Eastern. And for a limited time, we're offering a promotion where new signups can gain access to this powerful charting software, as well as the live study session workshop coming up this Wednesday night for only $1. That's right, $1 for the whole month with the class included. Remember, this offer is only good till this coming Wednesday night when the workshop takes place live with Tom O'Brien and Dave White, so don't delay. For all the details, visit the front page of TFNN.com.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow off 77 points right now. S&P down about 9. Composites off 14. Leading the charge, the upside, you've got Netflix. They're up $9 and change. Apple up $3. Benefit Focus up about 6%, up $2.50. Stratasys, 3D software company maker out there, hardware, I believe hardware manufacturers, well, they're up 1%. Leading the charge to the downside, you've got Priceline. That's off $12 and change, a little over 1%. Whirlpool off 7% this morning, down $10 and change. Expedia off about 9%. Pharmacyclics down. That stock has been on the rise. That's down about 2.5%, off about $3. Let's go out to Philadelphia to John. John, thanks for calling. Thanks for holding. How are you this morning?
Good morning, Steve.
Are you a Penn State fan?
Oh, I'm a fan of every sporting team, Steve.
You are? Well, they beat up on my Michigan Wolverines on Saturday. What a game! Went to 4 overtimes. Went to 4. It was a good game. Unfortunately, it didn't get my outcome, but maybe you got yours.
That was a very exciting, very entertaining game. I agree with you.
Yeah, absolutely. You wanted to take a look at it. The symbol didn't come across my screen, so tell me what you wanted to look at so I can put it up, and then tell us what you're looking at.
Yes, Steve. I have had ticker symbol GCC on my watch list.
Okay.
For the entirety of this year. I have done my
and that's Greenhaven Continuous Commodities. Is that correct?
That is correct.
Okay.
It is an ETF that tracks the Reuters Continuous Commodity Index, CCI.
Okay.
Of the various commodity indices that are available for investors to track general commodity prices, there's the CRB index, there's the Goldman Sachs Commodity Index, there is something known as a CCI, and it's been my experience in evaluating those various indices that the CCI index is the best of the three that I mentioned for tracking general commodity prices.
Mm-hmm.
And the ETF with the ticker symbol GCC tracks the CCI commodity index,
mm-hmm.
and it is not very liquid, so it is terrible for doing any short-term trades, intraday or day-to-day.
Yes.
But it does track CCI very, very well. It's a very tight correlation. So if one is looking to make intermediate-term speculations, GCC works just fine. So I've been looking at this for all of this year. I will tell you, I just put on a position buying GCC at 26.55. I am interested if you could apply your analytical techniques to the weekly chart and tell me what you come up with.
Okay. So we'll start off taking a look at the weekly chart. Again, folks, the ticker symbol is GCC. And one of the things that John had mentioned was it's not the most liquid of ETFs out there. As an example, October 2nd did 28,000 shares. The 4th did 13,000 shares. So certainly, John, you're looking at this as a longer-term, intermediate-term trade out here.
That is correct.
Yeah, and that's what you would most certainly want. So certainly that makes all the sense in the world. So if we take a look at the weekly charts and we just look for, the first thing that I would do is, let me try to expand this out a bit here, is look for some type of weekly candle formation. I'd really first start with the monthly, but we'll start with the weekly, and then we'll come back to a monthly out here. And so on the weekly chart, you got this little bit of this little rising window, this little gap up, which should be a strong support area. It's been tested once on the weekly. And, folks, that's between the time session of August 9th. The high on that for the week was $26.21. It gapped up. Now, I don't know, because it's a commodity play in the underlying instruments, you have to, those gaps either up or down have a lot less meaning because of the underlying instruments inside it. But just take a look at the stock chart. There is a gap. The low of August 16th was 26.25 out there. As far as any other bullish candles off of the bottom where you would find support, where these candles would suggest you have support, you have to go all the way back to the bull sash candle for the week of July 12th. And a bull sash candle says the low of either that candle or the prior candle is going to be your support area, which is all the way down at 25.72. Can you stick on through the break? Can you hold through the break?
Thank you, Steve. I will.
Absolutely. We'll be back with John and Philly. We're taking a look at the ticker symbols GCC. It's Greenhaven Continuous Commodities. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. The Dow is trading down 72 points right now. S&P off 7.5. We're going back out to Philly to our man, John. We're taking like a Greenhaven Continuous Commodities. GCC is the ticker symbol. So, John, one of the first things that I'm going to actually do is I'm going to put up another chart on my screen. Now, this is a tool that I've created to help me understand, to help anybody understand what the real momentum is inside the marketplace. And the momentum, and this is the weekly chart that we've got on the screen, because, you know, the saying is the trend is your friend. And there are several different ways to be able to identify trends out there. One is certainly higher highs on an uptrend, you know, lower highs on a downtrend. So that certainly is one tool. I like to be able to measure the actual energy of the market. David White, he's got that power law vector indicator. There's another tool that I believe works really well for me in helping to identify the trend out here. Now, if we take a look at on my chart here labeled, you're going to see colored letters, colored letters that are either green or red out there, and you're going to see them either that say U, D, or C out there. And U stands for uptrend, D for downtrend, and C for consolidation. Consolidation patterns, they're important to understand because they usually resolve themselves in the direction that they're coming from. So we can clearly see here that in the case of Greenhaven Continuous Contract, coming off of the September 14, 2012 timeframe, it has been, at least the way that my system marks this, it has certainly been in a downtrend. Now, the important here isn't that the system picked this out and that anybody couldn't have done this as well. The importance is the mere fact that during this downtrend, all of the signals are coming with the green shaded colors out there. Because in the green shaded colors, it's telling us, because that's not a normal marketplace. Normal market is where it's like an EKG, where simply where the relative strength indicator is just like a sine wave. It's going from up to down, up to down, up to down. A normal market. In a market that has a lot of tremendous pressure to the downside, you don't see any red-colored candles that have formed. I'm referring to them as not candles. Let's just call them red-colored Steve-O boxes for this conversation here. And it's telling us that the bears absolutely have control because they're not even letting the market move up to a normal level. And that's what the weekly chart is showing us out here. In fact, we can see that downtrend has been in place. I would say the clear downtrend has been in place ever since about the September 2011 timeframe. It's had a few counter trend rallies along the way, and that's what the weekly chart is showing. If I put a monthly chart for this same ETF on the screen, let me punch the monthly chart out here. Well, the monthly chart just shows the beginning of that downtrend that's in place. Let me put a daily chart. Now, the daily chart shows and maybe gives a little bit of an indication as to, why you have begun to take a trade and why you think that there's a potential for a reward to risk trade here. As this was making its lows back here during the day of August the 7th out here, what we see is we start to see that trend continue. These red boxes start to form. Now, that's bullish. When you just see these red boxes form, on the daily chart is telling us that the bulls are not letting that relative strength indicator get to the bottom of the normal area of the sine wave out there. So that's very important. So that's coming off of that August 7th area. So it's telling you that for whatever reason, the bulls here are really trying to, on the daily chart, change that trend that we were looking at on the weekly chart and exert their effort. Now, the last time that this thing pulled back was the day of September 18th. And when it did that pullback, it was with a higher relative strength reading out there, and therefore it established, even from the lower end of the spectrum, it established the potential beginnings of an uptrend. Now, as far as what one might consider to be a consolidation to move sideways, you've got to give it, to me, I don't use the low of the swing point. I give it a little bit of room out here, and that just simply becomes a subjective aspect. Is it a percentage? Is it 50 cents on a $26 stock? Is it 10%, which would be $2.60? It just depends on what it is that you use. I think I've just got out here, 50 cents, something like that. That really doesn't matter so much, but what you want to see is this continue to move higher from here, because the daily chart is saying, okay, maybe we're going to see that change, whereas the weekly chart is saying that the weekly momentum is still in bearish control out here until I see the next letter that would form, which will come from either the upper or the lower quadrant of the relative strength indicator. We won't know if, in fact, that trend has begun to change. So this is a different way, this is a different tool to be able to take a look at markets out there. And I think it's a real helpful objective way, because it just simply allows the charting system that I've created. I've created this tool here to let it tell me what the market is doing, what the actual bulls and bears are doing when we take a look at the strength of that way. So does that help you? I mean, because that's a different look than what I normally do during the show out there.
Steve, it helps very much. I do appreciate it. Thanks for displaying your proprietary tool on the weekly. Question for you, aside from GCC, what's the name you've given to this elaborate trading tool that you've developed?
I haven't given it one yet.
Got to come up with one soon, my friend.
Yeah, it's still under the development stage out there. But what I like to be able to do as much as possible is to try to take some of the emotion or some of the subjectivity out of trading. The more that we can take out of that and just simply make technical decisions. I imagine that there are some other technical things that went into your decision to go long the GCC. You've been tracking the other indexes, maybe it's some of the other underlying instruments that are in there, and so and it's important to have those elements. You've got to decide on when to pull the trigger. I always like to be able to share with folks. So when I said this morning during the opening show that I'm not bullish, I'm super bullish in the marketplace out here, it's really not me. It's using a set of tools and just reading what the set of tools say out there.
Yeah.
And on the trend piece of it, which is so important, if we use a weekly time frame as our basis, we're never going to buy a bottom or sell a top. Just can't happen. From a trending standpoint. And so you've got to go down to, a daily time frame, but it helps you to understand, especially in something that's trending down, is it just a counter trend rally, or is it really the beginning of a trend that takes place? And then it becomes helpful to be able to go back and forth between, the different charts out there, daily and weekly. Is there something else that you were looking at that you care to share with our listeners as to some of the reasoning why you went ahead and took a long position there?
Sure, I'd be happy to. First and foremost, on general commodities, I have some timing cycle studies that indicate a significant rise in commodity prices as a general asset category dead ahead. That's number one. Number two, I see when I think about commodity groups, I think of four groups: energies, metals, including precious and industrials, agriculturals, grains, and then meats and tropicals. And a number of the groups appeared to have set reasonably good bottoms late June. Mm-hmm. And on the grain front, there appear to be bottoms forming right in this time frame. And so I see the prospect looking across groups and blending that with my timing studies, and then looking at patterns that lead me to conclude going long CCI is a low-risk trade here. Of course, I'll manage my risk, put stops underneath lows, and the vehicle I can use for that in an unlevered sense is using the ETF known as GCC. So
now on the cycle management aspects, because you asked me to look at a weekly chart, I would just I would jump to the conclusion that your cycles that you're looking at are more longer term cycles.
They are indeed.
Okay. And when you take a look at that cycle work, do you then need to do you spend time to take a look at the strength or weakness of the dollar? Does that impact at all part of that decision making? Because you've got commodities that in essence are measured in U.S. dollars. So
you certainly would think so, Steve. One thing I would say categorically, is that if the dollar were declining, if the dollar were rallying decisively against a basket of foreign currencies, you'd have to be thinking this speculation of being long commodities generally would be a tough nut to crack. But I don't witness that as I look at the dollar vis-a-vis 10 foreign currencies. So.
Yeah, and that's the way that's the way on the longer term charts to me as well, especially with the euro being the 53% of that weighting, and the pound actually looks like it wants higher price as well, and we know the Japanese want to flood the markets. That's probably the yen, U.S. dollar aspect, but still, I think the percentage of that is around, is that 10% or something of the basket of currency, somewhere right around there. So they're trying to weaken the dollar, weaken the yen, and strengthen the U.S. dollar. But when you go back and you take a look at the other cycles that have come in on those longer terms, has the dollar had that much of an impact? Did the dollar index have to fall during that time period in order for that cycle to work where it was making a low?
Steve, that's an excellent question, and I plead ignorance to the answer to that.
Oh, okay. No. We're just curious. Cause I know you spend time on that. So, there certainly is on the daily chart a reason. I can see the logic behind it, and that same chart that I took a look at. If I go ahead and I put up gold up here, and I'll do that on the weekly chart. So I'll do that right now. I'll just put up the continuous contract for gold. What we'll see is, and this is not going to be news to you, it's also in this confirmed, on the weekly portion, it's in this confirmed downtrend. And so much so that even now when we do put it on the daily chart out here, it says that all that we really saw was a nice, strong counter-trend rally. But you still have that longer-term weekly, that's pushing back down. And now we're starting to see where the bears have really been exerting their emphasis here. Now, folks, if you're looking at this on the screen, you can't pay as much attention to whether something says U or C on it right now because it's using the same point spread. It's not a dynamic point spread to determine price adjustments between the upper lower threshold levels that I use out here to determine whether it's a consolidating pattern or not. But the longer-term trend still in gold is still to the downside, and all we're really seeing so far are just some counter-trend rallies out there. So,
Steve, thanks so much for sharing those techniques of yours as applied to GCC. I appreciate it.
My pleasure. Thanks so much for calling.
Sure thing.
Absolutely. Let's go take a look at some of these stocks here, folks, that are popping and dropping. Whirlpool specifically, which has been a very strong, rally stock with the housing market doing what it has been doing. So let's go take a look at Whirlpool. I don't see any news necessarily behind it. I don't see any numbers behind it. So they haven't had numbers released. We're just really getting into numbers season. So this being down 6%, that's a pretty decent decline. Let's go see. Ticker symbol, by the way, is WHR. And let's go see if and there is some volume behind that move, too, to the downside. Now, in the case of Whirlpool, it's been in a extremely strong uptrend out here. But it is breaking a B point now. If an A to B equals CD, an A to B equals CD down with volume. Now, that's a nice thing because other than today, it's not as if we have volume off the top inside this equity. We just have a B point being taken out with volume. And when you take a look at Whirlpool, number one, and let me get rid of the moving average lines that are out here, actually. It'll clean the chart up just a tad for you. So if you take a look at Whirlpool, and this is one if you want to talk about having a total brain fart, because I was watching Whirlpool, and I had things marked, and I just took my eye off of the ball. I just grabbed the wrong swing point. But this thing had an incredible breakout. Take a look at this breakout session. You talk about, what Tom's been able to teach us in the art of timing the trade out here. Take a look at the breakout session on Whirlpool, February 1st. 13 million shares to the upside, and it comes back and it tests it with 1.7 million shares. It comes all the way back. It fills the gap, so it completes the filling of the gap out there, so you don't have to worry out here. Gap's up. It hasn't seen. It has another small sign of strength on the June 29, 2012 level. That gap is still open, but that's regardless. But comes back into a breakout area, and take a look at that move. Going from the $50 area to $152, a 300% three-bagger out there, that is as good as it gets out here. Now, it can get better than that. You can go take a look at Priceline, obviously. The A to B equals CD. When we get back, we'll go see where that A to B equals CD down might project price into. I would suspect it's going to be this June 24th area. 877-927-6648. We'll be right back, folks.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
TFNN has just announced a special sale for 2 weeks only for the Gold Report. To celebrate the 600th weekly issue of Tom O'Brien's Gold Report being published on October 22nd, TFNN is having a special one-time sale. From now until October 22nd only, you can receive 60 weeks of the Gold Report. That's 14 months for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, which is almost half off the regular monthly price. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. Take advantage of this one-time special offer and pay only $600 for 60 weeks of the Gold Report. This offer is valid for current or new subscribers. Everyone is welcome to take part in this special promotion as we celebrate the 600th weekly issue of the Gold Report. All the details are on the front page of TFNN.com. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's off 77. S&P is down 8. I've got the Whirlpool chart on my screen. That's you got Priceline leading the charge on the way down, but it's only down less than 1%. It's off $9, so not a big deal out there. Whirlpool, on the other hand, off 5%, off $7.63. If you didn't catch the last segment out there, in the break, go back and listen to it. You know, I showed you on the daily chart how Whirlpool came back to a breakout area, tested on light volume, and of course, part of the reason that I was looking at Whirlpool, and I just pulled up the monthly chart. I haven't looked at this chart for a while. Of course, when I do the work, I pull up the charts, and then I say, sometimes it kind of makes you sick because of trades that you just simply missed out on. Of course, it only makes me sick for like about 5 seconds because there is always another trade. But take a look. This had a high volume high bar out here that had not been tested. You see I have written there untested high volume high back to April of 2010. Of course, what has also occurred inside of Whirlpool is it's broken through this long-term consolidation, a consolidation that takes you back into the 2009 timeframe. It's about a 70-point consolidation. It says that Whirlpool should make a run into about the 185-ish type range out there. And that's on the longer-term chart. So that's on the monthly chart. If we take a look at the daily chart on Whirlpool, now today, if we get a close below 132.88, it's trading at 132.45. It'll take out a B point of an A to B equals CD down. It'll do it with volume because you've got 2 million shares so far, taking out 1.1 million shares, and we got a lot of time left in the trading session. So a 1-to-1 takes us to 121.50. It looks to me like Whirlpool could run to the 116 level. Well, you've got a high volume bar down here almost at the bottom. It's kind of like the markets. June 21st was a high volume day. June 24th was the actual low out there. So it looks like what Whirlpool could do and where it would set up really the next potential buy. You'd have to watch and wait for some candle signals. You'd have to take a look at the volume as it comes down to that area, but right around the 107 to 112 level. Now, knowing that it broke that consolidation and could make a nice 70-point move up in the 180 level, I think the reward to risk is probably pretty good inside of Whirlpool. And if you're wondering what kind of move that Whirlpool has been in, how strong it has been, whether it's just been in a nice bull run or it's a super bull run. I shared with John a tool that I have been developing and working with to just really help us understand a different way, a different method for understanding the power of a move out here. If you take this is a weekly chart for Whirlpool. This right here, this bar back here in February 2012. This was the bar when it came back and it tested that level on June 29th of 2012. So you can see ever since that time frame, this has been in not a bullish run, not a super bullish run, but a super bullish run that it possibly can. The bears have never been able to push this all red colored lettering on the way up. Still in place today as we speak right now. So this thing is in a super bull run out here. That's on Whirlpool. So it's one of the housing stocks that I believe that you want to be paying attention to. And so just to finish it out here, let me see if this will work. I'll put up the S&P 500. The S&P 500, what you can take a look at here right now using that same system. Look, folks, this thing is in the strongest bull leg coming off of the March of 2009 lows, the one that we've been in from November of 2012. I'm not measuring it by price or anything like that, but just simply utilizing what I consider to be an objective method of measuring the momentum inside the market. The S&P 500, it is in a super bull leg up here. So that's on the weekly chart. Daily, intraday, all kinds of other trading out there. But, folks, stay tuned. Basil Chapman, he'll be up next. After that, we got Larry Pesavento. After Larry, it's Darryl White. Darryl Martin. David White. I'll get him straight. And then to Tom O'Brien. So have a great Monday, folks. Look forward to seeing you in the morning.
Are you ready to ride the next bull market wave? Catch the Chapman Wave. Using the Chapman Wave methodology, Basil's very comprehensive daily newsletter, The Opening Call, gives the short, intermediate, long-term analysis for the key indexes. In his Trader's Corner, he gives a brief market summary and expectation for the day with possible trades, both long and short, which are reviewed daily. A position subscribers sold recently for a 42% on part, plus a 64% on rest. And Hertz Global as a core position for 6 months before exiting the position. A current position entered as a turnaround company with good technicals based on Basil's waveform is trading up to 170% of its entry point as a portion sold earlier for a 21% gain. Subscribers to the Opening Call can see the Chapman Wave techniques demonstrated and explained daily to educate investors. To get your 2-week free trial to the Opening Call, just visit the front page of TFNN.com. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday at 11 a.m. Eastern on TFNN.